Hello, everybody, and welcome to VRIC Media, your most trusted voice in metals and mining. My name is Jesse Day. We're bringing the VRIC to you each and every week with our series of expert online panels. Today, we have a solo interview for you, somebody I always love speaking with. It's Louis Vincent Gave, founding partner and CEO of Gavical Research. We're going to discuss the emerging trade war between the US and China, why we keep seeing headlines in the West that China's economy is on the brink of collapse. Is there any accuracy there? We're going to talk about gold, energy, and a whole lot more. Louis, it is great to have you back on VRIC Media.
Thanks so much for having me. It's a pleasure to be here.
Well, let's start with the trade war that appears to be escalating between the US and China. Trump putting on tariffs, subsequently raising the tariffs, China putting on counter tariffs. What do you make of this whole scenario? Because you get a wide range of opinions here online. You get the people who are in the camp of this was just a massive economic mistake, a major blunder by the Trump administration. You get those on the extreme other side of the spectrum who say Trump is playing 4D chess. This is all the art of the deal. He's got an end game that's going to be beneficial for the US, and then there's everywhere in between. How are you viewing this situation?
Well, first of all, thanks a lot for having me. I'll always enjoy our catch-ups. Look, I think at this stage, if you're arguing that it's 4D chess, uh, you're really having a big slope to climb. I think that the reality is the U.S. is now stuck in a situation where it's negotiating against itself. China in recent weeks hasn't said anything, and the U.S. is now talking about, we're going to reduce the tariff on this and we're going to reduce the tariff on that, because the reality is the longer the tariffs stay, the bigger the impact on the U.S. economy. The bigger the impact on the U.S. economy, which, this time around, you can't really compensate the impact with fiscal spending. And that, I think, is the big difference between where China is today and the US is. In China, bond yields have been going down, and China keeps on announcing more stimulus to compensate for the trade war, and bond yields are going down. In the US, bond yields are melting up. And so the US is actually, boxed in where you're going to have the negative impact of the trade war through supply chain dislocations and most likely big impact on the economy. Think of construction as an example. Construction is obviously a huge employer in the United States, and construction is essentially a logistics game. That, like, if you're building a house on day one, you got to get the plumber, and then day two you get the electrician, and day three you get the guy who does the drywall. You can't get the guy who does the drywall before the plumber. It's like it all goes. And so if the plumber can't get the pipes at Home Depot because they're not being delivered by China, it completely, blows away your entire logistics and takes away the profitability of any, real estate development that you were doing. I highlight this because property developers already went through this trauma back in 2020, and in 2021. You may remember timber prices going through the roof and empty shelves at Home Depot, etc. And so given this trauma is still fresh in their minds, I think most of them are reacting to the uncertainty linked to this trade war by saying, okay, I'm postponing any development. Now, in French, we have a saying, which is quand le bâtiment va, tout va. When construction is good, the economy's fine. And that is true in every major market. And so I think here, the impact on the US economy will be pretty big. And that's before you go into the risk of, no fireworks for the 4th of July, no Halloween decorations for Halloween, no toys for Christmas. All the stuff that gets produced in China and that Americans essentially take for granted. Now, I'm not saying China isn't going to take a hit, because they make money from selling all that stuff, and now all of a sudden they won't be making money. But remember that China's trade surplus today is 90 billion US dollars. Now, 5 years ago, it was 25 billion US dollars. I'm talking per month, 95 per month, 90 per month, and 25 per month. So if China, roughly 17% of China's exports go to the US. So if China now moves from a trade surplus of, let's say, 90 billion to 60 billion, the economy's still humming along. It's still going to be okay. It's not as good, and China has a lot of other issues, but it's not as good. But deep down, I think when you look at the trade war, you know, trade wars of any kind, are won by the most resilient, and are won by you can only win a war if a country is massively behind you for the war. Uh, I think, I come from a French military family. I was an officer in the French army myself, and France fought a bunch of wars like the China War, the Algeria War, that frankly people back in France had little appetite for. And if you fight a war that people have little appetite for, typically you don't win it. I think that was the lesson as well in the United States with the Vietnam War. It was a lesson with the Iraq War. It was a lesson with the Afghanistan War. If there's no appetite for the war, you end up not winning it. And today I don't think the appetite for the trade war in the U.S. is high. It's very low. People don't want to pay more for stuff at Walmart. They don't want to pay more for stuff at Home Depot. And so, if you're entering into a war against which the majority of your population already has no appetite, I think you've essentially already lost it.
Well, Trump has been talking about making deals with a number of different nations, a lot of those obviously in Asia, and China has now warned countries against appeasing the Trump administration in trade deals. This could be creating a situation where many countries may have to choose a side in this whole debacle. Would you agree with that? And ultimately, how could you see that sort of bifurcation occurring? Could that result in an even worse situation for the US as countries like Vietnam, like Indonesia, like Malaysia, a lot of these countries end up siding with China?
Yeah, so I think that's a very good question. Clearly when the trade war started, uh, the trade war was declared on everybody all at once. And given the backlash in the markets, the backlash in diplomatic circle and amongst U.S. allies, I think the U.S. retreated and said, well, no, we didn't mean that. We're just going to create an anti-China coalition. Now, the reality is, if you're the president of France or the president of Indonesia, or the president of South Africa, would you make a deal with Trump and expect him to honor it? And when you look at Trump's own business record of him, frankly, screwing over contractors, of him walking away from deals, of declaring bankruptcies, etc., it doesn't give you tremendous confidence in taking Trump's words for something. And Trump is very honest about this. He's in it to make America great again. He's in it, and if that means screwing over foreigners, then so be it. Now, I think that the main message coming out of the Trump administration has been that, look, we've got these big budget deficits, but we're going to make foreigners pay for it. Foreigners will pay. We'll find a way to make foreigners pay for the hole we've dug ourselves into. And maybe we'll sell, $5 million cards for foreigners to move here. And then there's little demand. So maybe we'll put tariffs, or maybe we'll put higher capital gains or higher income taxes on foreigners who invest in the United States, which is David Moran's latest proposal. Very clearly, this is now the vibe that the Trump administration is passing on to the world. It's foreigners will pay. It might be attractive to Americans. I get that, but it's obviously not that attractive if you're a foreigner. And that brings me to a point I was discussing with a friend who's a very good private equity investor, runs a big private equity firm. And he told me, look, in my career, I've dealt with some really harsh deal makers, with some really, sharp-elbowed, tough-minded business people. And invariably, there were two kinds. There was the first kind is the guy who runs a very rough deal, and you walk out away from that deal with a feeling of, I have to, next deal I do, I have to be on the same table as this guy, And then there's the kind of guys where you're like, this guy's just a jerk and I never want to do business with him ever again. So you can be very hard in business in different ways. And here, I think the big question is, if you're the president of Indonesia, do you walk away from Trump thinking, this guy is really, really sharp and I want to be on the same side of the table with him? or do you walk away saying this guy is a jerk and I never want to deal with him again? And how do you feel about Xi Jinping? Do you feel this guy is a jerk? I never want to deal with him again, or I'd better be on the same side of the table? Everybody will have their own answers to that question. But I think the reality today, as you try to build an anti-China coalition, is that out of 170 countries in the world, 120 have more trade with China than they do with any other country. So, for the U.S. to come around and say, yeah, look, you got to pick, it's me or China. For 120 out of 170 countries, China's already more important. So it's essentially, aside from Mexico and Canada, who do more trade with the US than they do with China, everybody else that matters essentially does more trade now with China. So it's, I think the odds of building an anti-China coalition are very low. And I think that's why the US is already backtracking furiously on all their anti-China rhetoric. It's, right now it feels like you're looking at Michael Jackson doing the moonwalk, as Trump tries to talk back the anti-China rhetoric. And like I said, if you're China, it increasingly looks like Trump is negotiating against himself. You just sit back, you say nothing, and you wait for Trump to essentially talk back down the tariffs that, if they stay, are just going to completely implode the US economy.
Do you think there is a risk of this trade war turning into a full-on hot war, assuming things escalate from here? You mentioned the Trump administration now walking a lot of things back. But if we do continue to see it heat up, perhaps another reversal as maybe they realize China isn't willing to back down, perhaps with Taiwan being the focal point, could we see a conflict emerge, a real hot war? What are your thoughts there? If you do think it's possible, how would you expect that to play out?
I don't think it's possible, no. In fact, I think we're going precisely in the opposite direction. For me, one of the most important events this year, one of the things where I thought, okay, this is a game changer, was a speech by Eric Prince. Now, your listeners may not know who Eric Prince was, but he's the CEO of Blackwater, which is the world's biggest private army. They're, mercenary group. If you build an oil rig in the DRC, you're going to get Blackwater to come in and protect your engineers and your workers. And Eric Prince is a former Navy SEAL. He's one of the biggest warriors in essence of his generation. And he gave a speech in February at Hillsdale College, which your listeners can listen to on YouTube, and I highly recommend it if they've got the time. And in his speech, I thought it was fascinating because Eric Prince essentially argues that, look, the one thing we learned from the Ukraine war is that the primacy of US weapons is over. Now, I'm not going to argue with Eric Prince. He's obviously knows a lot more about military matters than I do. Some of your listeners may feel, that's, Eric Prince is doesn't know what he's talking about. Of course, US weapons are better than, stronger than everything, etc. But the reason this matters is that Eric Prince is very close to President Trump. And so what you have is one of the best warriors of his generation telling President Trump, look, the primacy of US weapons is over. In the first few weeks of the war, the Russians already figured out how to counteract a lot of our weapons. And another example of it, of course, is Yemen, where, frankly, a bunch of rebels in flip-flops are able to, prevent the biggest navy the world has ever seen from patrolling the Red Sea. I mean, it's kind of mind-blowing, really. And this through the use of drones and through the use of, frankly, teleguided jet skis loaded up with explosives. And so the reason I highlight this is that if you're Trump and you're hearing, look, the primacy, oops, sorry, I forgot to turn off my phone.
No
And you're
worries.
hearing the primacy of US weapons is now over, then, what do you do about it? And the answer is you fold back onto, essentially Fortress America, which is what Trump keeps talking about. You listen to Trump, all he talks about is how the US is protected by its two beautiful oceans. And what he is trying to do today is essentially kick foreigners out of the Americas. So you tell Greenland, you tell Denmark, hey, you guys get out of Greenland. You tell China, hey, you guys get out of Panama, you get out of Venezuela, you get out of Argentina. And at the same time, JD Vance shows up in Europe to essentially say, hey guys, you're on your own. Now, usually, when you break up with someone, you say, it's not you, it's me. But of course, JD Vance goes over there and says, no, no, it's not me, it's you. You're just a terrible person, and I'm breaking up with you. Um, and that message that was passed on to Europe is the same for Asia. People in Asia heard it loud and clear. So what you have today is a US that is retranching onto what you could call Fortress Americas or Fort Monroe. It's essentially we're retranching onto the Western Hemisphere because we know that our weapons that used to be generations above everybody else in this new modern world of drones, of teleguided warfare, then spending, like the Pentagon has been doing, sending $1 million missiles against to take down $10,000 drones that are coming at you. Just like the maths just don't add up over time. And so this is now the situation of warfare. So the reality is, no, the U.S. isn't going to go to war in Asia. Not that the U.S. has great memories of going to war in Asia to begin with. It's land wars in Asia are not the smart thing to do. Um, so bottom line, and all the people who tell you that there's going to be a war over Taiwan or that we're heading to war, etc. It's just fear mongering. It's not going to happen. The landscape is changing rapidly, and if you're Taiwan, the reality is you're realizing that there's a very short timeline on U.S. protection, and so and the same is true for everybody else in Asia. So you better make nice with China very quickly.
Is there any scenario under which this all gets reversed? In other words, the Trump administration decides, hey, we've really overextended ourselves here. We should probably try to continue our alliance with Europe. We should probably, like you mentioned, they're already walking back this talk with China. They say, you know what, there's no tariffs. We're sorry. Not in so many words, find a way to frame it so it seems like they're doing the right thing. And so it feels like Trump has the upper hand because I think that's very important to him. And then we kind of reverse all of this, and everything we've been talking to up to this point no longer becomes relevant. Is that a pipe dream? Is that even possible at this point?
I don't know. You tell me. How'd you walk it back? Once you spit in people's face and poke them in the eye, how'd you say, hey, I didn't mean that and we're good friends? Um, you might do it, but then you'd have to give up a lot. And so no, look, I think what we've seen is a super important shift. The US is folding back onto Fortress America. As a result, foreigners are rethinking their own ownership of US assets. It's, well, if the US doesn't provide me security anymore, if the US doesn't guarantee me access to energy like it used to in the past, why would I stay massively overweight US assets? The whole point of owning US treasuries was essentially to be able to buy US weapons and US and energy from the US in a time of crisis. If now I feel like in a time of crisis, when I'm desperately need US weapons and or US energy, the US is going to screw me over, then I may as well actually build up my own supply of commodities, build up inventories, and let go of all these excess US dollars that I've been holding. And I think we've started to see the first phase of that with the US dollar coming down, with US treasuries coming down. It's actually been an interesting few weeks where US treasuries have sold off, even as European bonds have done fine. So I think you're starting to see big repatriation of capital. And once these things start, they take on a life of their own. And it's not like a 3-week thing, it's a 3-year thing, or even sometimes a 3-decade thing. So the reality is we came into the Trump presidency with record ownership of US assets by foreigners. And meanwhile, all you hear from the Trump presidency is we're going to stick it to the foreigners. That's essentially the message, the relentless message. And we don't care what kind of foreigner you are. You can be Chinese, you can be French, you can be Canadian. I don't care. You're a foreigner. You're a no good foreigner. And so, given that underlying message, not surprisingly, foreigners are walking out.
So we continue to see headlines that China is on the brink of collapse. An article on Zero Hedge was released recently titled, China is in economic dire straits and they're no longer able to hide it. They discussed that the Chinese property market is
I
imploding.
loved that article, by the way, because if you looked at it, the article underneath was going on how China had bought 100 billion worth of gold in the past few months. So it's like they're going bust, but they've got all this money to buy gold, like literally like one after the other. So, okay, anyway, sorry, I interrupted you. It's
Yeah,
like when
no,
you're
that
going
that
when you're going bust, how much money do you have to buy gold bars as you go bust historically?
yeah, well,
Historically,
no,
you
that was
sell your gold. Historically, you sell your
yeah.
gold. You don't buy it.
Yeah, that was basically the whole essence of the question is how much credence do you give to articles like that? I mean, these have been going on for a very long time, talk about not only economic collapse, but a demographic collapse, and China's facing all sorts of problems. What are your thoughts? Is this pure propaganda? Is there some truth to these articles?
Look, China is facing all sorts of problems, and the demographic situation in China, as you point out, is very worrying. Not that that's a China, a sole China problem. You're seeing the same thing in Japan. South Korea, I think, is down to 0.7 children per woman. It's one of the
Yeah.
lowest in the world. I think Taiwan is at like 0.8. Thailand is just as bad as China now. The demographic problem is a real problem. I don't think it's a China problem. And by the way, we have a similar problem in Europe, except that in Europe we sort of mask it with immigration, um, which then means you have other issues, cultural issues, etc. So it's the demographic problem is probably worth an hour alone, but the reality is as societies urbanize, what you're seeing is as people live in pretty small spaces, and people in urban centers typically have one or two kids at most. But when people who live in the countryside have three, four, five kids. So as countries have urbanized everywhere, more and more people living in the cities, you get married later, you have fewer kids, you live in small spaces. And that is perhaps one of the things that actually does set the United States and to some extent Canada, but really the United States apart, is that in the United States, you go to college, then you move to a city, and once you get married and you start having kids, very often you move to the suburbs. And once you move to the suburbs, you have more space. Inherently, you have a house and you can have that third kid or that fourth kid in a way that you don't if you live in a small apartment. So in Europe, in Asia, there isn't that culture of let's move to the suburbs because there really are no suburbs to speak of. So there's no doubt that there's the demographic issue. Now, having said that, does the demographic issue mean that China implodes tomorrow, like those Zero Hedge articles and others have been claiming for the past 10 to 15 years? Well, I would say, let's let the market be the judge of peace here. And like I said, it made me laugh because under that Zero Hedge article, there was another Zero Hedge article highlighting how much gold China's been buying. So usually when you go bust, you're selling gold. You sell the family jewelry. You're not a massive marginal buyer of gold. Now, why is China buying so much gold? China today runs a $1.1 trillion per year trade surplus. Like that's gargantuan. Now, historically, this would have been recycled into domestic real estate, into domestic assets. But, consumer confidence in China today is very low. Business confidence is very low. So all this money, well, not all of it, but a chunk of this money gets recycled into gold every single month. But it still leaves you with the reality that how many countries running massive trade surpluses have you seen go bust? Um, and the answer is none, because when you run a massive trade surplus, inherently it highlights that you're deeply, deeply competitive. Um, and, China today is producing some of the world's best cars at the lowest price, some of the world's best industrial robots, best turbines, best telecom switches, best smartphones. Pick pretty much anything except for high-end very high-end semiconductors. And China today is producing, higher quality at a lower price than anybody. Now, how do you get from there to, oh my God, China is going bust? How do you get from being the world's most efficient producer to the country is about to implode? To me, to be honest, it betrays a lack of understanding of how China has evolved in recent years. Whenever people tell me China's about to go bust, I always ask them, look, when was the last time you were there? And very often it was pre-COVID, if they went there at all. Some of the biggest China bears in the market, famous for being China bears, have actually never been. The people who make all the arguments about China imploding very often have never been, don't speak the language, and don't know anybody who lives there. So I always say, look, if you had a Chinese guy who came to see you and told you who didn't speak English, didn't know anyone in the U.S., and had never visited the U.S., and if he came to see you and tell you the U.S. is about to implode, would you listen to him? Would you? And the answer is no. You'd think that guy was a kook and a clown. And yet, you have people who've never been to China, don't speak the language, don't know anyone there, who go around all day talking about how China's going to implode, and everybody listens to them. And you're like, why? It's absolutely baffling to me. Meanwhile, anyone who's visited in recent years comes back. I like to say there's two kinds of people in the world. There's the people who've been to China and who've seen, Xpeng's flying cars, who've seen the BYDs that go 2,300 kilometers on one tank of gas, who've seen the 450-kilometer high-speed rail, who've seen the fintech on display. And they come back and they say, look, the future is being made over there. And then there's the people who haven't gone and who look at these people who come back and say the future is being made over there and who call them CCP shills. They're like, oh, he's got to be getting paid by the Chinese Communist Party to say this. But, I invite anyone to go over to China, spend a week there. You know what? You can stay at the Four Seasons or the Rosewood Hotel in Beijing and Shanghai for 200 US a night. You can have the best service you've had. And to come back and to tell me that the place is about to implode, and then I'm happy to have that conversation.
I want to talk about gold here because it's one of the few assets that held its own when kind of the broader market was melting down in the aftermath of these tariff announcements, showing great resilience and perhaps affirming its role as a safe haven asset. How do you view gold's strength here, subsequently making all-time highs, at least in nominal terms, once again? And what does gold's strength tell us about the state of the global economy?
Look, it tells us a lot. I think the reality is, for most of my career, we've lived in a world in which the U.S. ran massive twin deficits. And the U.S., was exporting these dollars, and these dollars would typically be recycled into U.S. treasuries. For years and years, the U.S. pushes dollars out to Japan, to China, to South Korea, to Europe, to Brazil, wherever. And these dollars would then come back and be recycled into U.S. treasuries. We lived in a U.S. Treasury-backed world. And I think in 2022, two things happened that sort of blew that up. The first thing that happened was, of course, the seizure of the Russian assets, where all of a sudden, if you were not a democracy, you were put on notice that if you didn't behave the way the U.S. expects you to behave, your treasuries could be seized. So all of a sudden, that changed the risk-reward parameter of owning treasuries. Again, if you were a non-democracy. If you were a democracy, it didn't change very much. But as it turns out, a not insignificant part of the U.S. trade deficit is with non-democracies like China, like Vietnam, like Saudi Arabia, like Qatar, and so on. So that was, the first big signal. I think the second big signal in 2022 was when the Biden administration decided to embark on massive fiscal stimulus at a time when, frankly, U.S. unemployment was already at 4%. The U.S. economy was humming along, and the Biden administration decided, okay, let's do the Inflation Reduction Act and let's do another round of big spending. Let's do another $1.5 trillion. And that made a lot of people look at their treasuries and thinking, okay, why do I want to own these? They're super low yields. U.S. government has absolutely no restraint whatsoever. Um, and so you moved at that point to a world where, all these excess dollars that had been accumulated outside the US and that kept being accumulated through the trade deficits. All of a sudden you're thinking, okay, what do I do with these? I don't want to own US treasuries anymore. And I think people had two answers. The first answer was let's own gold. Let's go back to what we've done in the past. And this is what China did, and this is what Russia did, and this is what Saudi Arabia did. And the reality is once central banks become buyers of an asset, they're very much price insensitive. I mean, we saw this with bonds, right? When people were like, how the hell do we have negative yields on whatever it was, 15 trillion of government debt around the world had negative yield at the very top. It's like that's just stupid, right? But obviously these bonds were being bought by price insensitive buyers, and this is where we are in gold today. When Saudi Arabia announces we've bought $170 billion worth of gold over 2 years, it's actually interesting that they didn't say we bought so many kilos or so many tons. It's we're just you know they're price insensitive. If I'm the central banker in Saudi Arabia and MBS calls me and says, "Hey, you're buying gold," then I'm buying gold. It's like I don't want to end up in a Turkish consulate. And so that's just what happens. And same thing in China, and same thing in Russia, and same thing in a lot of places. The other thing I think that happened starting in 2022 is for the guys who didn't want to buy gold or wanted to buy something else, no longer wanted to buy US Treasuries, the obvious answer was to buy the Max 7. And you saw that from the Swiss National Bank, and you saw that from the Norwegian National Bank. It was essentially turning around and saying, okay, US Treasuries are no good. You know what? I can buy Microsoft because it's deep, it's liquid. I can always sell it again tomorrow if I change my mind. But more importantly, Microsoft is a better inflation hedge than US Treasuries because Microsoft can increase its prices 10, 15, 20% a year every year, almost regardless. And so we moved from a world where the treasuries were the backbone of the financial system to a world in which the marginal dollars of excess dollars in the world either went to gold or went to Max 7. Now, the Max 7 bubble burst when DeepSeek was released. Part of the excitement in the Max 7 was the idea that AI was going to be this, new big thing, and it was going to be this golden goose, and you needed to be a massive company that spent 50 to 100 billion dollars every quarter to play in the AI game. And then DeepSeek comes around and says, look, with a piece of gum and two strings, I've built this. And all of a sudden, it shattered the belief that AI was going to be this huge moat for these big companies. And instead, what we found out is that, obviously they'd overspent on CapEx and that this needed to be written off, number one. And number two, more importantly, anybody who's been involved in markets for the past 20, 30 years knows that when China enters a room, profits walk out. That the last thing you want to do in life is compete with the Chinese. If you find yourself competing with the Chinese, then you've taken a wrong turn in your life somehow. And this is where all of a sudden the big tech was. And so DeepSeek is released, and essentially they've been correcting ever since. And that meant, to your point, is if you decided, okay, I don't want to be in US big tech anymore, I don't want to be in US treasuries anymore, the marginal dollar just kept going into gold, and that's where we are, and that's why gold has done so much better than, frankly, silver or platinum or energy or any other commodity.
I do want to talk about energy. This is something that we usually talk about when I have you on the show. It's a sector you've been bullish on. Now we've seen a major pullback in the price of both WTI and oil-related equities in the aftermath of Liberation Day. Are you still bullish long term? Has anything fundamentally changed with the energy market dynamics? And just as a secondary follow-up, the election in Canada is coming up. Do you think the oil equities, the oil companies in Canada are under any sort of threat should Mark Carney win the election? Whether that's just from a perception standpoint, where people see that he's talking about climate change, he seems to be very anti-hydrocarbon. He's got a lot of that rhetoric. He's talking about keeping these emission caps on energy producers, et cetera. Do you think it makes a difference who wins the Canadian election in terms of the future of the oil industry there?
I do think it makes a difference. Look, I spent a lot of time in Canada. Today I'm talking from Vancouver Island. Uh, I I can't believe uh, I know the polls say that Carney's going to win. I can't believe it. I can't believe that the Canadians are going to go for a fourth term of the Liberals, given what they've just gone through with over the past three terms of the Liberals. It seems like madness to me. I know Canadians are nice, etc., but you don't have to be glutton for punishment. Um, it is mind blowing. Now, to your point, I think, look, what's Canada's big comparative advantage? Canada's big comparative advantage is getting stuff out of the ground, whether metals, whether timber, whether food stuff, and whether um, energy. And essentially, you know, when you look at Canada's history, you have administrations that are, pro getting stuff out of the ground, and you get strong growth in Canada. And you have administrations like Trudeau's and most likely Carney's that are actually very anti getting stuff out of the ground. And then you get weak growth and you get falling GDP per capita as you've had for the past 10 years in Canada. And if you take out your single biggest comparative advantage and you, instead of promoting it, you downplay it, you end up with a very, disappointing outcome. So I struggle to believe that a majority of Canadians can't see that. Uh, that's what the polls would indicate. I don't know. I'm hoping the polls are wrong, to be honest. I'm really hoping that the polls are wrong. Now, yes, I think having an administration that is pro extraction industry is much better for the energy stocks than having an administration that is anti extraction industries. That's for sure. Um, Now, having said that, yes, energy has sort of been my cross to bear the past couple of years. It's been it's been very, very brutal. Um, and as I look back, how did it go wrong, kind of thing. Uh, I think you've had a very odd energy cycle. Again, hindsight is 2020. But essentially, you start off with COVID, energy prices collapse and the interest rates collapse. And I think when that happened, everybody in the system built up huge inventories. China built up huge inventories, Japan, Korea, the US. And it was inventories all across the pipeline. Both the governments built up inventories and the companies did. Because why wouldn't you? You're getting free capital and essentially free energy. Why not store it? It just makes the most sense. You'd have to be stupid like Europe to not do that. Everybody else did. And then, so that was step one. Then step two, you get to the Ukraine-Russia invasion, and energy prices shoot up. And as energy prices shoot up, interest rates also shoot up. So now all of a sudden, funding all this energy is no longer free. And so what you see a massive liquidation of inventories everywhere. You see it very clearly in the data in the US. You see it in China. Today in China, the teapot refiners in Zhejiang and elsewhere are all shutting down because they can't get access to every crude anymore. Mostly because a lot of the stuff they were getting was from Iran, and that has been shut down. Um, and so, um, and Japan, China, US, like inventories are now, close to record lows. So here you are in a world in which, demand for energy continues to actually hum along. The demand side remains strong, partly because, well, pretty much all because the demand from emerging markets is still very solid. So now we're moving to a world in which the US dollar is rolling over. In which China is stimulating. Historically, both of these things have been, solid for emerging market demand, and they've been, usually that boosts commodities. So this is right now the setup. So we have very low inventories, Chinese stimulus, European stimulus, and US dollar rolling over. I think part of the weakness today is fears of a U.S. recession. Uh, Given that, the U.S. was the only growth in town for the past 5, 6 years, I understand where that fear comes from. Having said that, again, you get Chinese stimulus, European stimulus. So yeah, I find energy still I find the setup intriguing. I find it attractive. But like I said, it's been my cross to bear. It's been a huge bleed because a lot of the energy I own is the sort of higher beta stuff, things like offshore. And that's been, such a drag. It's been such a bleed on the portfolio that yeah, it's been a painful trade, but I'm still
Yeah.
sticking with it.
Yeah. Me too. I think over 25% of my portfolio is oil equities. So I've been feeling that pain as well. But I think in the long term, the setup is just too bullish to ignore. And I think as long as you have patience and see the bigger picture, that you'll get paid off in the long run. I mean,
I agree with you, although, sometimes I wake up and looking at my screens, I'm like, am I being patient or am I being stupid? But
yeah.
but yeah, no, look, I think that the problem with energy, I think it'll be a little bit like gold, is once it starts going, it starts going. And it'll move quickly. Historically, that's what happens anyway. Like once it gets going, it can move pretty quickly.
Well, Louis, this has been a fantastic conversation. So many great insights shared. Could you tell us about Gavical Research and anywhere else you want to direct people online who want to hear more from you?
Yeah, well, again, I'm always happy to catch up. Thanks for having me. Um, the best place to find out about us is through our website, gavekal.com. It's GAVEKAL. We do different things. We have a private wealth arm, an institutional investor arm, and we publish a lot of research for institutional investors. I also post the occasional piece on Twitter or X, and yeah, we have some free stuff on the website. So the best place to go is the website, and you can of course follow me on X. My handle is Gav_Vincent.
Great. Well, I will put a link to both the website as well as your X profile in the description so people can follow along. Thank you so much, Louis. Always a blast conversing with you.
Great to see you, Jesse. Thanks a bunch.